Calculating your net operating income can be pretty simple. All you need to do is subtract the operating expenses from your gross operating income. Because the net operating income is calculated yearly, all of the income received from a property is added together, and that gives you your gross operating income. Then, to get your operating expenses, add up all the money that you spend on the property. Now, these figures would be based on estimates when you're researching into an investment property. On the other hand, gross operational revenue isn't merely the ideal amount of money that you would make from a fully occupied space. You still have to consider any current or upcoming vacancies or any income that can be made from those vacant units. Additionally, it is essential to remember that operational expenses simply refer to the daily expenditures that you need to keep the rental property functional. This includes costs like accounting and attorneys to plumbing and electrical expenses. However, things like mortgage payments and your personal income taxes are not a part of the operating expenses. So if you're considering investing in a property but you're not quite sure if it's going to be a worthwhile investment, by calculating the net operating income, you can get a pretty good understanding of the property's income versus the cost of running the property itself. If you're considering investment in a property but you're not entirely sure if it'll be a worthwhile investment, by calculating the net operating income, you can get a pretty good idea of how the property's income will fare against the property's cost.